All right, let's kick things off with a real head-scratcher. How on earth did our world work for hundreds of thousands of years with absolutely no money? I mean, think about it. No cash, no credit cards, not a single bank in sight. How is that even possible?
I know. It sounds pretty much impossible, doesn't it? Like, how do you trade? How do you save for a rainy day? How do you manage risk? Well, that's the big question we're diving into. And believe me, the answer is a lot more social and way more human than you're probably thinking.
And get this, we're not talking about some weird historical footnote here. This is the story of the vast majority of our time on this planet. We're talking 95% of all human history. For almost all of our existence, economics wasn't about currency at all. It was all about community.
Okay, so let's set the scene. We're going to jump in our time machine and head way back, deep into the Paleolithic era. We're going to try and understand the financial system, if you can call it that ran our ancestors' lives for thousands and thousands of years.
So picture this. You're living in a small, mobile group, maybe 20 to 150 people, tops, and it's basically all your extended family. Everybody knows everybody. You're living together, traveling together, and your survival? It absolutely depends on everyone cooperating.
And in this world, just forget about all the tools of modern finance. They just don't exist. There are no coins clinking in your pocket, no contracts to sign on the dotted line, and definitely no spreadsheets to track who owes who what. And yet, somehow, they had a really solid system for managing all of it.
And this really gets to the core of the whole thing. The economy wasn't about transactions, it was about relationships. For almost all of human history, economics was basically just relationship management.
So, if there was no money, what was the currency? Right? Well, it was something we actually still understand perfectly today, your reputation. And this brings us to the key idea of this whole ancient world, something called moral debt.
Now, moral debt, it's not some number sitting in a bank account. It's that feeling. You know the one when a friend spends their entire Saturday helping you move. You don't owe them like $47.50 for their time. No, you owe them a favor. It's this unwritten, unquantified social rule that says, hey, I've got your back next time.
And this is really the key difference. On one hand, you have financial debt, right? That's rigid, it's specific, it's quantified down to the last penny, and it's all based on a contract. But moral debt, that's the complete opposite. It's flexible, it's open-ended, and it's based entirely on your relationship with that person. It's basically the difference between a friendly IOU one and a 30-page mortgage document.
So in this world, your reputation was, for all intents and purposes, your credit score. If people knew you were generous, reliable, and pulled your weight, they'd be happy to help you out when you needed it. But if you were known as a freeloader or someone who didn't contribute, well, your social credit would tank and you'd find yourself on your own pretty fast.
Okay, so how did this whole system of reputation and obligation actually work day to day? Well, let's break down the nuts and bolts of it.
So everything revolved around this cycle of giving and receiving. Imagine this. A hunter has a really successful day and brings back a huge animal. What does he do? He shares the meat with everyone in the group. Now, this isn't just him being a nice guy. It's a critical economic move. He's reinforcing social bonds, and at the same time, he's creating a kind of insurance policy, an unwritten rule that when he has an unlucky day, someone else will share with him.
You can really think of the system having a few key parts that held it all together. First, you have the gift. That was the spark that created the moral obligation. Then you have reputation, which we said was like your personal credit score. The community's collective memory, that was the unwritten ledger, keeping track of who was in good standing. And what if you tried to cheat the system? That's where social sanctions came in. We're talking everything from public ridicule to being kicked out of the group entirely. That was the enforcement.
And look, this isn't just some abstract theory. We've seen this in practice with real people. For example, the hoansi people of the Kalahari have this incredible sophisticated system of gift exchange they call hxaro. And for them, it's not about the stuff they're trading. It's all about keeping those long-term relationships and alliances strong. That's what really matters for survival.
Now, this system worked brilliantly for small, tight-knit groups where everyone knew each other. But, and this is a big but, it had some serious limitations. So what happened? Why did this world of moral debt eventually start to fade away and get replaced by something else?
Well, as humans started to expand across the globe and then began to settle down in one place, everything started to shift. The real game changer was the dawn of agriculture around 10,000 BCE. Suddenly, the entire structure of society was changing, and these changes put a ton of pressure on that old, relationship-based system.
Basically, the system just couldn't scale up. I mean, think about it. Your reputation and the town's memory work fine when there are 50 of you. But what about 500 or 5,000? It just falls apart when you're dealing with strangers. Complex trade with multiple groups becomes a nightmare to track. And those deep obligations, they rarely, if ever, extended to outsiders. You could say the system was a victim of humanity's own success.
But here's where it gets really interesting. This ancient system didn't just vanish into thin air. Nope. It actually became the foundation for everything that came next. It's the hidden blueprint for the financial world we all live in today.
That agricultural revolution was the spark. For the very first time, people had a surplus of stuff, more food than they could eat right away. Well, now you need to track all that extra stuff, right? And that need leads to writing, which leads to formal ledgers. And once you have ledgers, you can start to quantify debt, put exact numbers on it, and even charge interest. The old, fuzzy moral obligation was suddenly becoming sharp, defined, and written down.
So, what this all really shows us is that the core ideas of our modern economy are incredibly ancient. We think money came first, but no, credit came first. We think laws and courts came first, but trust came first. We think of dollars and cents as the first units of account, but social obligation came first.
So our crazy, complex world of global finance, it didn't just pop up out of nowhere. It's really just the tip of the iceberg. And that iceberg is a 200,000-year-old social technology. All we really did was figure out how to formalize those ancient human instincts and scale them up for a world of billions.
And all this leaves us with one last big question to think about. Our financial world today is built on algorithms and spreadsheets and ledgers. We've gotten really good at quantifying everything. But what happens when we forget about that ancient foundation it's all built on? What happens when we forget about trust? What do you think?